So now let me share my screen so that we start studying everything one after the other. Okay, let me share my screen. Are you seeing my screen now? Hello?
No, sir.
No, sir.
You're not seeing my screen? Oh.
No, sir.
Okay. How about now?
Yeah.
Yes, we can see it now.
I can see it now.
Okay, that's good. And what I wrote is you can read it. Everything is okay, right?
Yes, sir.
Yes, sir, we can read it.
Okay. So now everybody, you can mute yourself and let's start. Mute yourself and let's start. Okay. So day one, which is today, you are welcome everybody once again. Day one is today, and we are going to be looking at the following items. Number one, we are going to be looking at the foreign exchange. We'll explain foreign exchange. I say everybody mute yourself. I don't want to mute you. When you are required to talk to me, you can unmute and talk to me. But for now, everybody mute yourself. It's time for me to talk. It's time for me to teach, and I don't want distraction. I don't want noise. Just mute yourself. Just mute yourself, okay? Do you get? Mute yourself. When you want to ask questions, in fact, don't even just write your question down. When I'm done with item 11, that's when you ask questions. Okay? Maybe I should mute it from here. Don't know. Are you still seeing my screen?
Yes, sir.
Hello.
Yes,
Okay,
sir.
we are still on day one of Forex Foundation class. All right. Now, mute yourself now and let's go. Everybody mute yourself. Let's go. Okay. All right. So, mute yourself and let us go, please.
Yes, sir, we can see your screen.
Okay. So, day one of Forex trading class, we are going to be looking at foreign exchange. We'll look at foreign exchange market. We'll look at why the need for foreign exchange market. Is there any need for it? We'll look at who participates in the foreign exchange market and for what reason do they participate in the market. Okay. We're going to be looking at who are you among the list of the participants and how should you be looking at yourself. Okay. We're going to be looking at why the Apex Bank of any country need to intervene in foreign exchange market. Number 7, we're going to be looking at, can you drive the volume? Can you drive the volume? Number 8, is there a possibility to place your order where the banks place theirs? We're going to be looking at that. What state of mind is great to trade Forex? We're looking at that. Can you make a living trading Forex? Yes. If you learn to trade, if you learn how the banks are trading, you can do that. How do you classify yourself when you trade? And then follow up with assignment. What is foreign exchange market? List 5 participants in the foreign exchange market. Is the Apex Bank of any country participating in Forex for profit? You learn that. The second day, we continue. Let's leave the outline, all other outlines. Let's leave them. Let's concentrate now on today's outline. Okay? Actually, I'm supposed to write brief description on some of these things. But since this is a video, each topic is outlined here. I will read out the topic and explain to you some of the things you need to know that you are not knowing. And that is why Forex is a bit difficult. You know, you'll be surprised when you hear me say, so thing will go down this week. I'm not just saying it on the basis of technical analysis. I am seeing the background story. I am seeing what is going on in the background that will warrant those pairs to either go up or come down. That is the essence of knowing the basis and the foundation of Forex. If you don't know some of these things, you'll be gambling. You'll be guessing. This is not a guesswork. This is usually precise to the point. All right? So, without much story, it is foreign exchange. It is foreign exchange. The process of exchanging one currency for the other, at a certain price level, at a certain price point is foreign exchange. When you say foreign exchange, it is not a particular currency that is involved. There are two currencies that are involved at a particular point in time when you are talking of foreign exchange. Now, remember, we are not talking about the market now. We are talking of foreign exchange. For instance, you want to go to Europe to buy some items and you are in America. What is the primary currency in America? It's dollar. Now you want to go to Europe to buy something. They are not going to take euro from you. They are not going to take USD from you in Europe. So you have to find a way, to exchange your USD to what? To Europe, so that you can purchase your thing in Europe. So to you now, you may not be trading Forex, but by you doing this, you are a participant. You are a participant in Forex market. And you are doing it not for profit, but for some other reasons. So this is foreign exchange. You are changing one currency to the other currency for you to be able to fulfill one transaction or the other. At times, consciously or unconsciously, your bank will do the exchange for you. You are paying somebody in Britain to purchase something. You are paying in dollar in your country. But paper is changing this money at a certain rate to GBP on your behalf. That is foreign exchange. Okay? Now, we now understand what foreign exchange is. What is foreign exchange market? For the fact that we have added market, market is a place where buyers and sellers exchange goods and services. That's a market. What does it mean? Market is a place where buyers and sellers exchange goods and services. So when we say goods and services, this time around, what is the goods that we are talking about? Is what? Is the currency. Is the currency. So foreign exchange market is a market where currency is being traded. There you have the buyers and you have the seller. For you to buy something, you must need somebody that is selling that thing. And for you to sell something, you must need a buyer who is ready to buy what you are selling. All right? So, but some people will say, what if I want to sell a certain financial instrument and there is nobody to buy? I will be explaining to you when we get to participants in Forex market. You will know liquidity provider, you will know their role. At every point in time, you want to sell, your order will go through. If you want to buy, your order will also go through. Because there is a participant that people don't know, we call liquidity provider, that provide this liquidity to enable this transaction to flow through. So foreign exchange market, which we call FX market, is a place where transaction takes place from Monday or from Sunday to Friday night every week, except public holiday, major public holiday. Transaction take place 24/7, all right, unabated, where you sell and buy foreign currency. That is a foreign exchange market. And out of different markets you have all over the world, foreign exchange market is the most liquid market. The transaction volume of foreign exchange market is presently above $6 trillion. it combines the transaction volume of what you have in the capital market, what you have in crypto market, what you have in oil market, what you have in commodity market. If you combine all together, they don't equate what you have in FX market. And that is why we want to tap, we want to benefit from that liquidity. That's why to trade Forex market is, if you know how to do it, it's a place where you can have 100% gain in 1 week if you know what you are doing, because you want to benefit from the liquidity that is available in the market. Then, if we know we have this liquidity, what is the need for foreign exchange market? What is the need? Why people go into foreign exchange market? And what is the need for it? I've already answered this question in outline 1 when I was discussing foreign exchange with you. You are a Nigerian. You want to go to Britain to buy 1 or 2 things. Can you spend Naira in Britain? No. You can't spend Naira in Britain. So some people, I had some students in time past who asked me, Mr. Nat, I said, yes. He said, this business you said you encourage us to do you think it will not stop one day? That's the question they kept asking me. Don't you think it will stop one day? So if we have invested money, we have invested time to learn the business and to do the business, when the business ends, where are we going to go? I laugh. I said the business will end in a day where the whole world is using one currency. Oh yes, the business will end in a day when the whole world is using one currency. And we cannot foresee the time that will happen. We don't know when that one will happen. It won't happen. So for the fact that it will never happen for all the countries in the whole world to use same currency, then foreign exchange market will continue to be. And then the need, when there is need for international trade, there is need for country to exchange goods and services. When there is need for business people to move from one country to the other, there is always going to be need for foreign exchange. And the foreign exchange market will always be there to exchange these currencies, as long as there is disparities in expertise of different nations. Let me break this down. The tech expert that you have in USA is of higher level than the one you have in Nigeria. So there is need for flow of technology from United States to Nigeria. And as long as you have that, then there is need also to pay the expatriate from United States in their own currency. They're not going to take from you your own currency. So there are difference in class. They are going to come here to execute contracts. They are going to come to Nigeria to execute projects. And when they come to execute project, the contract might be signed for them in dollars. Are you okay now? If a British man or a British company go to Australia to take a contract, it's going to take the contract in the prevailing exchange rate. But do you know what the company will do? As they have their money, they are going to hedge it. When you get to the intermediate class, you learn what is called hedging. They are going to say, oh, we have taken this contract at this exchange rate, but please, we want to hedge it in case there is inflation in your country that causes the value of your country to fall. So we are going to lose. So because of that, we want to hedge and mitigate against possible inflation. So when they do that, you now see that the effect of that hedging they do will show in the Forex chart. So you can see these people now, they are not in the Forex chart, they are not in the Forex market to make money, but they are in the Forex chart and they are in the Forex market to hedge their position against the contract they have taken in another country, so that the fluctuation in the market, in the global market, will not affect their own contract execution when there is need for purchases. Can you see now? So these are some of the reasons why there will always be need for foreign exchange market. Now, who are the participants in the foreign exchange market? The participant, and for what reason do they participate? I'm going to give you some participants in this market, and I'm going to tell you the reason why some of them are participating, all right, and why we need some of them. Number one, you have the monetary authority of different countries. I'm going to slow down because I know some of you are writing. Okay, you have the monetary authority of different countries. When I say monetary authorities, in Nigeria, Central Bank of Nigeria is the monetary authority. In America, Federal Reserve is the monetary authority. Write it down. Federal Reserve is the monetary authority. In Australia, we call them Reserve Bank of Australia. RBA, Reserve Bank of Australia. In Switzerland, we call the monetary authority Reserve Bank of Switzerland. Okay? In Switzerland, we call them National Bank also. National Bank. So different major economies, they have the name they call their monetary authorities. Okay? These monetary authorities are the key participants in the forex market. Why are they participating in the forex market? Why are they participating? They are participating in the forex market because they want to regulate the monetary they want to regulate the monetary condition of their economies. They want to take control of the monetary value of their currency. They want to take control of demand and supply mix of their local currencies. That's why they participate. Okay? When they discover that the value of the currency of their country is becoming strengthened and strengthened, and when the value of a currency is strengthened, it can be a problem for that economy. It can be a problem. It can be a problem in the sense that export will be difficult. Okay? Export will not pay them again. So what will people do? What will the monetary authority do? They will do something. They will tinker on the value of that currency. What will they do? They will supply. They will do something to increase supply on that currency. So if they increase supply on that currency, what will happen? The value will drop. And as soon as the value drops, that will favor exportation and limit importation. You can see that's how they work with the finance minister of that country, who is in charge of fiscal policy. They work with them and make sure that things, the monetary system or the monetary health of that country is stabilized. So this is how they participate in the forex market. They are not participating because they want to make money. They are participating to look at the condition of inflation of that country. They want to look at the condition of interest rate. They want to look at interest rate. They want to look at borrowing. They want to look at foreign direct investment and how it impacts their local economy. So they want to tinker on all these parameters so that the overall health of the economy will improve. This is why the CBN participates. The second major participant in the forex market are what? The brokers. The brokers. You as individual trader do not have access, direct access to liquidity providers and the interbanks. You don't have access. So it is the broker that stands as an intermediary between the traders and the interbank market. They stand as intermediary between the broker and the interbank market. So you, as the trader, you place your order not with the bank. You are placing your order with the broker. And the broker is in turn transferring your order to the liquidity provider. So some people, they say the broker, they are the one who are manipulating the market. I just laugh. When you say the brokers are manipulating the market, it means that you don't have proper understanding on how the forex market works. Brokers don't manipulate the market. They don't manipulate the market. Well, let me say brokers who are ECN, all right? ECN brokers, they don't manipulate the market. What they do is that you submit your order to them. They in turn transfer your order to the liquidity providers. Okay? So if you are gaining, your broker is not angry with you. If you are losing, they are not also angry with you. They have submitted your order. What they are particularly interested about is their commission. Okay? They are about their commission. And as long as you place your order, boom, like this, they have taken their commission. So what happened thereafter? None of their business. If you make profit, the profit you are making, even though they are the one paying you, you are making it from the liquidity provider. You are making it from the interbank. That's where the profit is coming from. It's not paid to you directly from the broker. The broker is making their money from their commission. All right? So brokers, don't get angry with your broker. Don't say that it's your broker that is failing you. Don't say that it's your broker that is not making you to make money. No. Their own is to transfer your order to the liquidity providers or the interbank market. Are you okay now? Another set of participants in the forex market are the retail traders. The retail traders. When we say the retail traders, who are the retail traders? You and me are the retail traders. Retail traders have little volume. They have little command, little control in the market. That is one of the reasons why this training is very essential. You must know where you stand in the market. You must know that the volume you command in the market is so infinitesimal that it can easily be wiped out. But then, how do you position yourself in the market to train like the professionals? How do you read the market to know where the banks are putting their orders, where banks are selling, where they are buying? How do you position yourself to know this price level? That is why this training is very essential. Many people have been trading, but they don't know some of these tricks, and that is why they have been losing. They say buy from support. I bought from support, and now I hit stop loss. You know the concept of liquidity. You know the smart money concept. You know where the banks are buying. You know where they are selling. You don't know. That is why your support will not work. How do you read the market to know the support that will work and the resistance that will fail? How do you know? You know, for somebody like us, we can tell you this, your resistance is going to be broken. And it will be broken by so number of pips, and it will flush down. We'll tell you way before it happens, and exactly the way you meet it. It is because we have a proper foundation about forex. Don't go straight to the chart. You must understand the basic theory. So, another participant, without wasting much of our time, another participant in the forex market are the hedge funds. There are people who call hedge funds. Those ones, the only thing they know how to do is to just hedge their positions. For instance, if they put a massive buy in the market, and what happened? Market is now selling seriously. These people, they wait They have put a buy. Now market is selling. They don't even put a stop. Let the market continue to sell. Let it continue to sell. At different time, they put in buy position. As the market is selling, they are hedging the position. They can put a sell position. They are buying, they are selling. As the market flows down and make them money on profit, at the end, the sell, they put on buy again and pack it from bottom. These are hedge fund, operator. They act in the market in a very funny way. And let me tell you, they know they lose. They don't lose at all. But I encourage all of you not to trade the market the way they do. They are not afraid to get in or to operate the way they operate because they have the fund. They have the money. So you don't have the money, you cannot afford to trade like them. So are they in for profit? Yes. Hedge fund operators are in for massive profit. They are not like CBN. I just want to come and control the market. No. This one, they want to make money. You have the retail traders. That's another, participant in the market, like you and me. You have the retail trader, all right? So these retail traders, they are there. Gone are the days when Forex market was not available for everybody. It was just available for the banks and few privileged individuals who can control billions of dollars. But with the advent of technology, this has changed. You and me can participate in the market with our $50, $100, $200, and we still make money out of it. But let me not deceive you. You are coming in with $200 and somebody is coming in with $1 billion US. You are not coming in with the same amount. So why many are failing in this market is because they come with little amount and they have the mentality of little person in the market. But the essence of this training is to train you to come to the market with little amount and think like somebody who has come with $1 billion US. Are you getting me? Let me repeat myself. The essence of building this foundation and to train you right from foundation to intermediate to advanced is to teach you how to come to the market with $200 US and having the mentality and the trading, tactic of a bank who has come to the market with $3 billion, $10 billion. So the essence is that you just use your own tashere, your own small change. Use it to follow the billionaire and make your little money out of the market. Simple. Do you understand now? So number 5. Or do we still have participants? Yes. We still have participants. We have liquidity providers. These are silent people in the market that you don't know. They are making billions. They are the ones making the major part of the money. Liquidity provider, the interbank. These are critical participants in the market. They provide the liquidity. All right. You go to them. You can't go to them directly. You go to your broker. Your broker submits your order to them. When you start trading, all right. When you start trading, you will notice that when market close and another market is opening, we have told you market is 24 hours. It doesn't close until Friday. Between that 10 o'clock and 11 o'clock is 1 hour. You see that there is a large, spread in the market. That large spread you notice in the market is nothing but created as a result of low liquidity and period where there is interbank settlement. Okay? That period, there is interbank settlement. That's why I always encourage you, you notice when it is close to 10 o'clock, I close all my orders because some of those profits is going to wipe away as a result of this wide gap. But by 11 o'clock, liquidity will return to the market because the interbank has finished settlement. They are done with the settlement of the day at the end of New York session. Remember, New York session is going to close by 10. So that by that time, there must have been settlement of all interbanks. Australia Bank, the CBN of different countries, they have settled themselves. Market will continue again. Do you understand? So those liquidity providers, interbanks, they are the ones who have enabled us to gain access. They provide liquidity. You want to buy, even when the whole world is selling, you want to buy, no problem. Buy now. Your buy will hit stop loss and go. Their own is to collect your order. Okay? So I will be teaching you as time goes on how to read the market like the interbank. How you catch liquidity in the market. You are going to be getting some of these gist. Okay? So who are you among the list of the participants? Who are you? Who are you? You are a retail trader. You have small money in the market. You command low volume in the market. So I want you to have that mentality that in this market you are coming in, there are people who are bringing billions of dollars into the market. Your own is just $200 US. Your own is $500 US. You command no volume. You are, in fact, you are the least recognized among all the participants in the market. I want to prepare your mind for it so that when you come to the market, you do not show your muscle. If you know the people you are trading against, you know the people that you are competing with in the market, you will calm down. You will bring your nerves down. You will pull down your head. But because you don't know the people you are competing against, you are raising your shoulder, your shoulders. That is why most of the people, when they come and raise their shoulder, they are being humbled. They are being humbled. Remember, there is something I forgot to tell you. There are many things you have to learn in this market. But I can tell you that it's not everything that is important. I have drafted out everything that is important for you. So anything I have not drafted here, just ignore it. What you need to be able to trade well is what I'm telling you. And all these items I see here, go to the internet after we are done, maybe later in weeks to come, go and start putting them in search engine, Google them, read more about them. Do you understand now? Let's proceed. Why the Apex Bank of any country need to know? Let's leave that. We have done who are you among the list of the participants. I've told you who are you among the list of these participants, that you are nobody. Don't come and raise your shoulder. No. Because many people have been deceived in the past. How are they deceived? We have been deceived that will just come to the market. You can make 50% in a month. You can make 100% in a month. You can make 300% in a month. Just come to the market, press this, press that, and it is done. It's a lie. It's a lie. I'm preparing your mind. I am not one of the people. You see, I have nothing to gain. Whether you continue your journey in forex trading or you don't continue, I have nothing to gain. This lesson I'm preparing for you guys from beginning to intermediate to advanced is free of charge. I'm not taking any money from anybody. I vow not to take money from anybody. The people I charge are people who say, please give me special attention. Focus on me and train me specially. I want to be like you. I want you to mentor me. I charge them $500 US. If you are from US, you are from first tier country, I will charge you $1,000 US for me to do training for you, for me to coach you one-on-one. All right. If you are from Nigeria, no, we don't have much money. I will charge you $500 US. But for general class and general lesson and general training like this, I don't charge anybody anything. It's free of charge. So in that case, I am in a position to tell you the truth about the market, about trading. I have to tell you the truth. And if you follow my step-by-step guide, you will now discover that what you used to know, what they used to tell you, are lies. They are fucking lies. Follow the guide. You will get it. Don't jump to intermediate. Don't jump to the advanced and neglect, the beginning. You must know what drives the market. You must know when market moves in a certain way. You must know why it's moving. Do you understand? So you are a retail trader and he wants to coach you and put it in your brain that you are a retail trader. But at the same time, teaching you to reason like a billionaire. You get me now? Somebody should unmute himself and let me know that you are still hearing me.
Okay.
Unmute yourself.
Yeah, we're following, sir. We're following.
We are hearing you, sir.
Correct. Unmute yourself now. Let's go on. Yes, correct. Unmute yourself now. Let's go on. The excess of me advising some of you to join this foundation class is that I want to remind you that you are a bloody retail trader who has no command of following the market. You are coming with little amount. So some of you come with little amount, and when you come with this little amount, you now want to trade as if you are coming with 1 billion. That is why the money will wipe out before you know it. Wow. So what is my job? My job now is to let you know that you are coming to the market with $200, but I will now tell you the modality, the trick, the techniques, the technicalities of you now taking your $200 to follow a company that is coming to the market with $10 billion. So that when their $10 billion is going a certain direction, your $200 will follow. Your $200 will follow their own direction. So as their $10 billion is making $300 million for them, your $200 is making $20, $30 for you. That is my main focus of the entire lesson, from day 1 to day 5. How do you reason like the billionaire? All right. How do you reason like the billionaire? Even though you don't have the billion, you are coming with small, but you want to know when they want to enter. And by the time I'm done with you and you are fortunate to follow me to intermediate and advanced, where you are learning smart money concept and how to trade like the bank, you now see where the others are sitting. It is only the interbank that are privileged to know where the others are sitting. But I will now teach you how to recognize where they place those orders. I keep telling people, banks don't have access to trading view that they are looking at chart. Banks don't look at chart. What banks have access to is the record of customers' demand of buying and selling of a particular asset. Customer can come and say, and place order with JP Morgan and say, please, I want to buy, for instance, JP Morgan, I want to buy euro at so price. I want to buy Great Britain pounds at so price. I want to sell Australian dollar at so price. They have the money with those banks. They just place the order. As soon as they place the order, their job is done. So it is not the job of this bank, this bank or liquidity provider to now, buy the particular asset on behalf of their clients. So if a client place order at $10, I want to buy USD at $10, okay, against USD, USD against JPY at, let's say, 190. This interbank, they know how to manipulate the market to 160 or 170. Instead of buying this order at 190, they'll buy it at 160 or let's say 175. Don't let us put too much gap. 175. Do you see the gap between 175 and 190? That's $15. This $15 is a profit not for the customer, but for the interbank, for the bank. Not interbank, sorry, for the bank. The bank owns this differential. They manipulate the market a little. When I say manipulation, it's not intentional. They just push in the order to push the market down so that the price will drop. As soon as their large supply comes in, when there's excess supply over demand, my advanced students will know that there are 3 stages to the market. You either have the market in excess supply or excess demand or equilibrium. So when the market is in equilibrium and customers have placed order they want to buy, what will happen? What will the bank do? The bank will push enough volume to sell that market so that there will be excess supply over demand. And what happens when there's excess supply over demand? Price will drop. When price drop, all the customers that have placed their order above, bank will now buy for them at a lower price. So customer will be reading in their own record that they are buying at 190, but bank have pushed down the market to 175, buy for them at 175, take the profit between 175 to 190. Their own profit will now start reading from 190. That is what the bank do. And then how do you know how do you know where the market will be rigging to? Do we need to buy? If they want to buy low, where, under what condition will they buy at that lower price? These are some of those things. This is why I say come for the foundation. All right? So now, you know where you stand now. You know who are you now. And you're a bloody retail trader who come to the bank, who come to the market with little money. Never raise your shoulder. Never fight the market. Never compete with the market. Follow the rules. By the time you fail to follow the rules, you're already competing with the market and its participants. You are already competing. And if you compete, you holding $200 US, you want to compete with a company who is holding equity, total equity of $1 billion US. You can't compete with them. They are buying. You want to sell. JP Morgan want to buy Euro USD. What is his name? Nat want to sell with $1,000. This money will wipe in 1 hour, 1 hour's time. You know why? It takes 10,000. It takes let me see. Let me get the record straight. To move 1 pip in the market, it takes 10,000 lot size. Hear me well. 10,000 lot size is what you need to drive the market by 1 pip. So when you are seeing market moving 100 pips, do you know the amount of volume that is pumped into it? Is it our $200 or $1,000 that is that volume? No. So please, I beg of you. I saw somebody who chatted me. Maybe he's in this training right now. He's trading without stop loss. And I laugh. How can you trade without stop loss? When there are more than 6 trillion in the market, you are holding only $200 US. You are using your $200 US to compete against 200 billion, and you are not even putting brake to say, if you get to this place, take me out. You are joking. So I'm training you to prepare your mind that you are nobody in this market. But then I congratulate you because there are learning curves you can follow to become somebody in the market. And how can you become somebody? Becoming somebody is coming to the market, even though knowing yourself as a retail trader, but you want to have the mindset of the bank. You want to have the mindset and the orientation of the liquidity provider. You want to know how they operate. You want to know what drives the market. If the market is moving, you want to know why the reason why the market is moving. And you want to know the right time to jump into the market, the right time to get out of the market. These are the nitty-gritty. These are the essential ingredients you need in order to what? In order to trade the market efficiently and effectively. If you don't know all these things and you are just doing technical analysis, you are deceiving yourself. Because some of us, we also started by just learning technical analysis. We forgot about this basic foundation and we suffer for it until we have to retrace our steps and have begun to understudy the market and why the market is moving the way it's moving. You need to do that. All right, let's move on. We have done we have to go to outline 6. Maximum we should spend 1.5 hours and we are done. Outline 6, why the apex bank of any country need to intervene. Why do they need to intervene? I think I have discussed that with you when I was discussing the CBN of a country. Why do they have to intervene? I've told you that when a country's currency is too expensive, when it's too expensive, what is going to happen? Let me break it down. Okay, let me break it down for you so that you can understand. Let's say in Nigeria, naira to dollar is very high, meaning that you need more naira to buy dollar. What happened to those that are exporting goods outside Nigeria, those that are participating in export? What happened to them? They are going to earn dollar when they sell the cocoa and coffee, when they sell it to France. What happened? France will pay them euro. No, let's use USA. When they sell their cocoa to United States will pay them dollar. Okay? And when they bring the dollar to Nigeria, already the dollar, naira to dollar, is let's say 550 naira to $1 last week. This week now, let's say it has become $600 to $1. Can you see now? So because they have exported and the value of the country is very low due to whatever reason which we might discuss later, you can now see that they have earned more foreign exchange. Now, which if they convert to their local currency, they earn bigger amount. So everybody is encouraged to participate in exportation when there is devaluation of your local currency. Do you get now? But now let's check the reverse is the case. Let's check when your currency is strengthening. Let's say now today our currency becomes $200 to $1. What happened to those that are exporting goods and services? They will use $200 to buy whatever they want to buy. When they sell everything, they bring $200 down to Nigeria. Does it pay them? No. You now discover that people will not participate in export again because they are not bringing foreign currency that will help them to pack their local currency. So what will people be doing? People will be participating more on what? On importation. Because exportation is not paying them. They will be participating more on importation. That is why the valuation of currency is good in a way because it helps to what? To encourage export. And when you do more of export than import, your balance of payment will be very healthy. Do you understand now? So that is why the Apex Bank will now be looking at the value of our currency. They now tinker with it. When they see that, this currency is too expensive, and it's too expensive now. What will happen to import? What will happen to export? They'll say, okay, no problem. It's too expensive. I will make it to be too cheap. How am I going to make it too cheap? They just go to interest rate, change the interest rate. They just change the interest rate. When they raise interest rate, what do you think will happen? When they raise interest rate, the value of that currency will appreciate. And then many people from every part of the country will want to get that currency. And how do they secure currency of that? How do they secure demand for that currency? They do business with you and earn money in your currency. So that's how the CBN will keep on changing interest rate. When you look at inflation, later you see what is called inflation targeting. Most of the major economy, they target their inflation not more than 2%. So if it is more than 2%, it's too high. They change interest rate. When they change interest rate, the inflation will come down. If it is less than 2%, it's too low. They will change interest, they will increase interest rate so that the inflation will go up. You will see that as time goes on. Do you understand? Can you drive the volume? I've already told you, you cannot drive the volume because your money is small. So it is my responsibility to teach you. All right? It is my responsibility to teach you how to use small money you have, come to the market with it, but have the tactic and the mentality of how the bank trade, so that when the bank take a direction, you will know when they have taken that direction, and you now follow them with your small money and make money. Is that okay now? So now let's move. Is there a possibility to place your order where the bank place theirs? Yes. You are going to see what makes my methodology unique. You are going to see it. In fact, I must confess to you, I'm so proud of my trading techniques. Because why am I so proud of my trading techniques? I discovered 2 years ago that you cannot trade a single system and succeed in Forex market. All right? Some people, they will tell you that they trade support and resistance. Some people tell you that they trade demand and supply. Some people tell you that they trade Elliott wave theory. And some people will tell you that they trade smart money concept. How many techniques I have told you now? 4 different techniques. I know how to trade based on support and resistance. I know how to trade based on demand and supply. I know how to trade with Elliott wave theory. And I know how to trade with smart money concept. So what did I do in the last 2 years? I focused my attention on how to combine these 4 different techniques. How to combine these 4 different techniques to now make my trading decision. And ever since then, it has been spectacular. And you are fortunate to now start learning from this. It is because of me utilizing these 4 different techniques that make me now to see why support and resistance will fail. Why your demand and supply that you trade, when you are trading demand and supply alone, because of me understanding 4 different techniques, I will know that your demand level will fail. Because I'm now introducing concept of smart money concept to know liquidity and know why there is need for liquidity grab, because liquidity grab. All right? Because I'm now thinking like a bank. I'm not thinking like a single trader. I'm thinking like I'm trading for the bank. I'm thinking like the liquidity provider. That is why I will know that this your resistance will fail. This your support will fail. And then when your support have failed, I am going to be one of the people that will take it from the lower level, which will never envisage. But before it happened, I already told you, people who are here in this foundation class, who have been with me over time, who never had their foundation from me, they came to build from me. They will attest to the fact that I will tell them that this area, market will break it to this other level, and from this other level, market will close down. And exactly as I have told them, that is how it will be. Am I part of the liquidity provider? No. Am I working, or do I have inner information of any bank? No. But I understand 4 different techniques, and I have combined them to create a trading system that works. Because of that, I know what works and what does not work. That's it. And that's where I want you to come in. Come and learn from me free of charge. Know what works, what does not work, so that you can know how to position yourself for the task ahead. I can tell you, understanding Forex chart is the easiest thing, but you must know what drives the market. Those are the things I'm training you with, and you should do more research on them to know what drives the market. All right, let's proceed. Item 9. What state of mind is great to trade Forex? What state of mind is great to trade Forex? In the last part of this course, I'm going to take you through what is called market psychology. All right, market psychology. And when we get there, you must listen to me very well. I am privileged to have, even up to this present moment, I am privileged to have 1 hour free coaching session from FTMO. I trade for FTMO, and they are world acclaimed psychologists. Is there to have at least 1 hour session in a month with all FTMO traders. So I choose the date I want to have mine. And when the day comes, I will have 1 hour Zoom session with the expert psychologist. So if I'm teaching you on psychology, market psychology, listen to me very well, because I have been trained by world-renowned psychologists. Do you understand? What state of mind do you have? If you are angry, are you supposed to trade? No. If you are tired, are you supposed to trade? No. If you are fighting with your friend, you are fighting with your husband, you are fighting with your wife, are you supposed to trade? No. If there is violence in your neighborhood and you are not concentrating, are you supposed to trade? No. If your mind is not settled, you are bothered, are you supposed to trade? No. Be writing, be listening to me, so that when you start trading, don't say, I lost my head. When I lost the first trade, I lost the second trade, I now lost my head. There's nothing like losing your head in forex trading. The more you lose your head, and the more you go back to it, the more you lose your money. Get that clear? And I don't want a situation where somebody will come and say he loses his head. There's nothing like that. Too. Once you know that your state of mind is not clean, it's not clear to trade, and you are not a swing trader, just excuse yourself for the day. When you know your state of mind is not clear enough, it's not calm and calculated enough to be able to follow the rules and guidelines I will tell you, please don't trade. I have my own rules, I have my own guidelines, but if you follow it, you will understand this thing and you will thank me later. For instance, any new student I take, I tell them expressly, don't trade Asian session, don't trade a London session, only trade New York session. And some of them that follow the rules and guidelines, they thank me today. In fact, there are some of them I also give them not more than 3 pairs. They will master. They will follow those 3 pairs. And there's no way that they will not see trading opportunity on those pairs. And they make money in it. Do you understand now? So, what state of mind is good, is great to trade forex? That state of mind must be calm, calculated. It must not be when you are driving. It must not be when you are tired. It must not be when you are stressful. It must be when you are in a good condition. If you are a day trader, you are concentrating on it. If you are a swing trader, no problem. You can even have bad state of mind, no problem. But the time you are entering that trade, you must be in a very free state of mind. You must be able to read out all the rules and guidelines and follow them at every point in time. You follow them, they are okay, they are good for you to go, then go in. Go in, you are a swing trader, maybe you are leaving your trade for 1 week, 2 weeks, 3 weeks, no problem. But if you are a day trader, every day your state of mind must be good. Not when you are troubled. Some people, somebody died for them. Say they want to trade to make money for the burial. At times you may be deceiving yourself, except if that person that dies is an old person. That is not paying you much, but you need to do that celebration in a very big way. That time you can trade to make money for the burial. But somebody that is very young, very dear to you, as you are thinking of interest rate, you are thinking of the person that just died, and you want to trade forex to make money, under that condition, you are joking. Not done like that. Because I will be teaching you later on how to balance up technical analysis, where to go and look for fundamental analysis, how to check sentiment analysis, and then how to now support with behavioral analysis. I'm going to be teaching you all this. Okay? like somebody in my Wednesday live session, one of my members asked me, he said, what do you see about GBP JPY? I told him, this is what I see about GBP JPY. At this level, I just want to show you so that we know what we are doing here. GBP JPY, I hope you are seeing GBP JPY's chart. Are you seeing it?
Yes, sir.
Correct.
Yeah.
We were here at this level, GBP JPY. He said, what do you see about GBP JPY? When I said GBP JPY is going to come down, but not now. He said, how? I said, under this, you are going to have a push to the upside, and after that push to the upside, you are going to have a flush down. Look at it. It's not stopping here. But do you see that we did not catch it from top? Fine. But you see, opportunity is coming. Goes down. This structure is very clear. When you get to Elliott wave theory on the introduction and the basic, I will show you. What makes us to know that this will come down? I will tell you everything. Is it not coming down? When did we tell him? Last week, Wednesday. From here, I told him, going to go up this way and go to, and I even told him around 160, 169. From that price level to close down. Exactly at that level. Where is it now? Close down. That is what it means to understand all the techniques at the same time. And that is what I'm giving. I've spent a lot of money to understand it that way. I've practiced it over time and I'm giving you free of charge. Okay? Number 9. We are done with number 9. Number 10. Time is going. Can you make a living trading Forex? Yes. If you learn how the banks are trading. If you are thinking, if you are having the mentality of a retail trader, it will be very difficult to make a living as a Forex trader. But if you are having your money based on the size of the money you have in the market, you are a retail trader, but based on the way you think and your mentality, you are trading like a bank. You are trading like a liquidity provider. You are looking. I told one of my students who is doing one-on-one with me, I told him, before you trade, you must look at liquidity. How bank will look at it, how liquidity provider will look at, will think on picking order. Do they pick order at resistance? They have been teaching you people sell at resistance, buy at support. That's what they have been teaching you. It's a wrong notion. I'm going to be showing you why you have been failing by buying at support, selling at resistance. We sell at a price that is higher than resistance. And how do you know that the market is going higher than that resistance? Because when you sell your own, we are watching you. Okay, before you know it, market just sells small, boom, and break that resistance, hit your stop loss. That is when we are getting in. And I've told most of my followers, I've told them how to recognize what is called fair value. Fair value is an equilibrium state of the market where buyers and sellers agree at a certain price range. You now see price begin to go up, down, up, down, up, down, up, down. But as soon as you break up from the fair value, you have excess supply over demand. That is where the banks are getting in. That is where the liquidity providers are getting in. That is where they are selling. But you are having pain. You are having pain at that time. Why? Because you have placed sell on the resistance. Because they taught you to sell at resistance. You place your sell there. Boom. Market breaks it. Banks, they push their order far above resistance. And they are flushing down. Before you know it, market will now flush down below your level. You now say, hey, see, after hitting my stop loss, now it's coming down. Because what you are supposed to know, you do not know. All right? So, but you are here now. Congratulations. I will show you some of those things. And if you can take a decision that this is the only thing I want to be trading in the market, and if I don't see this, I won't trade. Congratulations to you. Your progress will be rapid with that. Now, number 11, how do you classify yourself when you trade? I've already answered this question. Classify yourself when you trade as a retail trader. You see, I have been emphasizing this because this is a basic understanding that people lack. They don't want to classify themselves as a retail trader. They want to compete. They want to compete with the bank. You can't compete with them. You have to have the mentality of a retail trader. But when you are now trading, you now see, how do you approach this market like the bank? How do you approach this market like the bank? I don't know if you understand. How do you approach this market like the bank? Even though you are coming with $1,000, how do you trade it as if you are with $1 billion? How do you recognize the place, the position, the price level where the people with $1 billion US are coming in? That is your job. I told one of my students that everything we are looking for in the market is liquidity. We are not looking at the resistance again. We are not looking at support again, although we want to see the lowest point, the highest point. But even at the highest point, how do we approach the market there? How do we know when the banks will get in? How do we know when they will sell? How do we know when they will buy? This is what we want to know. See, all the things that is happening internally, sell, buy, we don't want to be concerned ourselves with all those stuffs. We want to trade when there is liquidity. Do you understand now? That is our interest. Our interest is never on what is happening internally and where most of you place too much emphasis. Where you place too much emphasis, there is nothing there. Nothing there. Do you understand now? Are you see my screen? What's on my screen now? We're on the course outline, right? Are we still on the course outline?
Yes, sir.
Correct. So now, how do you, I'm telling you now how you should classify yourself. Know yourself
Yes,
as a
sir.
retail trader. Know yourself as you don't have much money. But all you want to learn in the market is that those that have enough money, how do you know the direction they want to follow? And how do you follow that direction? That's all. Take your own little money, follow their own direction. That is all. That's what you need. But if those that have enough, those that control liquidity in the market, they are following a certain direction and you are following opposite direction, you are in trouble. And your own eye, based on how they taught you support and resistance, you will think that you are doing the right thing. You will think that you are doing the right thing. But all at a sudden, you see the market, boom, in the other way around, and you are in trouble. So now, the essence of this training is for you to understand. It's for you to understand how to get in, why you should get in there, how to get out, where you shouldn't get in, when to trade, when not to trade, what to trade, what not to trade. I'll give you an example of what not to trade. I have a friend here. His name is Ham. When he first joined our group, Ham Sam, I know Ham T, right? When he first joined our group, his only was to just be said, yeah. His own was to be sending chat on crypto. This guy said he's just starting to trade. He just trading crypto. I say, guy, you must know what to trade. If you are just starting off how to trade Forex, don't go to crypto. You have no business trading crypto. Buy, sell. You can invest in crypto. Like you that are here, I will be telling you to save money and I'll be telling you at what level. I've told you, I've given you the gist yesterday in the group. When crypto is coming down to 25,000, I have been telling you when crypto was $68,000 per one crypto, per one BTC. Bitcoins is coming to 25,000. I've been telling you, it's almost 6 months now, 7 months now. I kept telling you, I'm a technical analyst of great repute. And if I tell you something about a chart, follow it. Because it will happen. It will happen. That one is based on Elliott wave theory forecasting. I forecasted it. I've sent it to my TradingView profile. The whole world can see it. This is what I've said, Tunde BTC. And it's coming down right now. It's at 30 something. I told you when it was 68. All right. Now it's at 38. It's going to come down to 25. And if you are lucky to catch it at 20, 23, and when we move from that level, we are going to 80,000. If possible, it might hit 100K before we see another massive sell-off. I'm telling you now, prepare your mind. So now, you're supposed to know what to trade, when to trade. When we get to, I'm not going to dwell too much on this because in our subsequent lesson, we are going to be looking at market sessions. And under market sessions, I'm going to be telling you the peers that move in certain sessions. And then the session that you should not even be trading. And the only session and period I want you to be trading. See, if you are a day trader, I'm telling you, your trading in a day should not be more than 3 to 4 hours. And I will tell you the windows and the market you should focus on. So let me not dwell much on this item 11. I'm still going to talk more on this. All right. Your assignment, before I give you for a question and answer, I told you my presentation is just 1.5 hours. Okay. Your assignment will be, what is foreign exchange market? Define it for me in your own understanding. 2, list 5 participants in the foreign exchange market. Don't even discuss them. Just list them for me. Let me know that you understand. 3, is the apex bank of any country participating in Forex for profit? If yes, why? If no, why? When I say apex bank in Nigeria, CBN, Central Bank of Nigeria. All right. In America, Federal Reserve. In Australia, Reserve Bank of Australia. New Zealand, Reserve Bank of New Zealand. Who can tell me that of Great Britain? What's the name of their monetary authority? Nobody knows.
Bank of England. Bank of England.
Correct. Bank of England. Bank of England. If we were to be in physical class, everybody will clap for you. Bank of England. That is the one in control of that of England. I think we have National Bank. It's controlling that of Switzerland. Okay. And then we have many like that. You tell me whether they are participating in Forex for profit. If yes, tell me why. If no, tell me why. And all the answers, you answer all the questions, you copy it and send it to the general group. Don't send it to the course group. Send it to the general group. Let all other people who are not participating, let them see the great work you are doing. Let them see the knowledge, the new knowledge you are getting. All right, that they don't know. And by doing that, you have become their teachers. You have become their teachers. What you are writing, they are reading it, and you are teaching them. All right. And at the end of the day, if you are able to answer all my questions and having understanding of everything I have taught you, by the time I get onto the chat and I'm dishing out information to you, it will be new because you already knew everything. Do you understand the reason now why there is need for basic class? This is the reason. When I'm dishing out the information, I'm writing some of the technical knowledge. When you join my intermediate, I'm writing. I don't know how to say it. But can I give you an example? Let me give you an example. Let's go to Telegram. That will be the last part of this lesson. Let's go to Telegram. Let's go to this chat. Are you seeing the new chat? I see Elliott Web Trader Free Group. Is that where we are now?
Yes, sir.
Correct. Now, do you see all this write-up? You see this chart? You see all this write-up to explain this chart? When I'm writing all this, watch. Mute yourself. No room for noise. Anytime you have a break of equal low and tap liquidity at major level and push up fast to the upside, the end of the next correction end up in fast move in the direction of the impulse. If you don't start with me from the foundation, you can never understand this write-up I put here. That is why most people, they are in this group, they don't understand what I write. Why? They don't join me from foundation. Look at it. I'm giving out a lot of lessons today because the whole of next week is full of look at all these ones. Okay? This is the technical listing I'm telling you. All right? The technical. Okay, look at the above. Okay. So I have a lot of write-up like that. Okay. I say wave A is fast and sharp. Wave B is slow and sluggish. And wave C is sharp, fast, and short. Can you see now? If you don't follow me, for me to train you, and for you to hear all these things from me from the class, you can't hear from the group here. So joining my group will not benefit you if you don't take my lesson. You know, see? And I say, this is the summary of running flat corrective structure. I said, what makes it difficult to trade is our inability to know whether the C wave will be short or long. If it's short, then it's a running flat. But if it's long, then it has become expanded flat corrective structure. You see, the above description is what we call structural transformation. Structure can transform from running to expanding flat. It can also transform from regular to contracting flat. But the easiest to trade is complete formation of expanding flat and complete formation of regular flat. I always encourage my students to avoid contracting flat and running flat. Great free lesson to you all this evening. This is advanced topic in wave analysis. What I have just explained to you is a simple stuff. But for those who are following me and who are understanding my lesson, they can break this down into pieces and analyze it. Do you understand now? So this is a reason why you must pay attention. Follow me from beginning, from foundation to intermediate and to, okay? So that should end our lesson for today. Give room for question. Now, if you have question, ask your question. Let me answer you. Ask your question. Unmute yourself so that we can hear you and ask your question.
Good evening, Mr. Nathaniel.
Good evening, sir. Tell us your name before you ask your question.
My name is Ambrose Iwiriogene.
Oh, my brother. Good evening, sir.
Yeah, thanks, my prof. Well, thank you very much for this insightful lecture.
Thank you, sir.
All the things you have said, in short, it's like you are bringing me back to KG1. I mean, primary 1 to learn the fundamental. And I quite appreciate it. The time put in here is very, very valuable for me. And in fact, it's like I've never had this raw. Even if you try to teach a primary 1 student, it will grab everything. So my just one question is this. Now you mentioned about moving with the banks when they come in, when they go out. My question is this: do they have a duration of? I mean, for how long do they come in? You know, those guys, they can just come in. Is it for 30 minutes, 1 hour, 2 hours, and they cash out what they want to cash out from the market and they are off again for the day? So how do
that's
we?
Your question.
Yes, sir.
Okay, thank you very much. Well, where banks enter the market, all right? They enter the market within a few minutes. They have picked the order and they are gone. That's what is called liquidity. And at that point, many of the retail traders have lost. Because of that question, I'll go to the chart right now. Let me give you an example. USD card. Example that I've given my people before in the group. One example. you seeing my chart? I see that we are on a chart now.
Yes.
Yes, I'm
Correct.
seeing it.
Correct. This is a USD card. When we were here, do you see that when you draw your trend line, you draw it like this, Abi? Draw it like this. Draw it like this.
Yes, sir.
Do something like this. Correct.
Yes.
I told my student, I say here, everything here. No bank is buying or selling here. This circle you see, no bank is buying or selling. This is what we call fair value. Fair value. Call it fair value. Fair value means that the market is in a state of equilibrium where buyers and sellers have really agreed that price can go within this range, but they have not decided where price will go. So banks don't buy there. It is only retail traders that buy there. They keep on buying, they sell, they buy, they sell, they buy, they sell. But what do we wait for? At this level, I told my students that this is a fair value. Don't participate. Don't do this buy, do this sell, do this buy. No. Wait. But if we see that above here, there are a lot of orders from the bank residing there, that if this fair value break down straight to the downside here, it then means that banks want something. What do they want? They want a lower price. And that is why they will push this market down here to this support. Look at it. Look at this other zone. See it? When they push it down here, we are going to catch the buy here. Boom.
Sorry,
So
sir. Sorry to distract you, sir. I'm not seeing the indications you are giving. Maybe your cursor is kind of white, and the screen of your chart is white as well. So we are not seeing the indications you are giving.
Okay.
The
Let me
indications
see
are
what.
very, very clear.
I can see
Maybe
I can see everything. Check your
maybe
network, Mr.
it's
Philip.
What
check
you
your
do is to
network.
remove, click on that place where there's chart and remove his own picture. You don't need to see his picture at this time. Just focus on that chart. That should be what is obtainable on your screen.
I'm looking at the chart. That's what I'm saying. I'm looking at the chart. He's indicating by his cursor. He's saying at the resistance level that the price need to fall down, but we didn't see where he circled. I only saw only one. Yeah, no problem. Everybody should be.
Black. He's writing in black.
My brother.
No problem.
Hello, and the recording will be available for everybody. Okay. I appreciate your concern, but if maybe it's your network or your device, but the recording will be available for you. Okay. So what did I tell them in the group that time? I told them when you have a fair value, you are not privy to bank information. You are in Lagos here. You don't even know what is happening, but you are looking at the chart. Your own is that if bank want to buy, there is something that will happen. If bank want to sell, there is something that will happen. But what is in between is equilibrium. So market can either be at equilibrium or be in excess supply or be in excess demand. So when the market is at equilibrium, you as a retail trader, you keep your money and you are watching. Where is the market going to go to before it will push to the other side? If the bank want to buy, will they push the market up to go and buy at expensive price? No. When they want to buy, they will break it from this equilibrium. They will come to excess demand here. And from here, bank can pick order here. And when they pick order here, it's going to go up very fast. And I told them, at the same time, from this fair value, market can break to the upside if the liquidity provider want to bring down this pair. They take it from here back here. Can you see it has broken this range? It's out of this range. Where did it go to? I'll show you something. You see this highest point here?
Yes.
See this highest point here? This is the supply. When this market pick order here, boom, to the downside. What did it do here? Up.
Yes.
Fair value here, break up, pick liquidity at the supply here, boom, to the downside. Exactly what happened. Look at it here. I told them, look at it here. Liquidity, boom, to the upside. Big supply here. And what does it do? Boom, to the downside. Can you see now? Now, let me now tell you something. Watch something. You understand the concept now. You are not with the bank, but you already have idea of what the bank wants to do. And for you to catch it well, you will see that at different level here, there will be what is called psychological level. Psychological level is a whole number level. Let me now tell you the psychological level where bank place their order here. I'll show you. What is this, guys? What is this price level? 1.2900. Is that correct? Is that correct?
Yes, sir.
Yes.
Correct. So now when you just answer me, you mute yourself immediately. You can see after this fair value here, banks already knew that they want to sell this market at 1.2900. So retail trader, they have been buying, selling, but I told them don't buy, don't sell, leave it. If this market break down, we will buy from here. If this market break up, we will sell from here. But now, where are we selling? When this market was still here, how do we know that it's going to sell from here? Concept of knowing price level, which we call psychological level. Psychological level are the whole number prices in the market. Here you have 1.2900. Another one is 1.300. So when you see, if this market break this level of 1.2900, be targeting 1.3000. But because we were in a New York session, when this breakup happened, we knew it was going to break down at this level. What do you see? From here, let me take my ruler, from this price level down here. How many pips? 466 pips to the downside. Can you see? So now, is it just one technique? I used to know this. No. You must know Elliott wave theory, have idea of Elliott wave theory. I've used here Elliott wave theory. I've used here supply and demand. I've used here smart money concept, so on and so forth. So this is how you will know when the market will come down. And if peradventure you miss the exact, do you notice that the exact point that price bank sold, the market never got to that place? Did it come back to that place again?
No.
It will never come there. It will never come to the exact price level. So those that were not aware that, oh, we are going down from here, opportunity will still be given to them. That is why you see this pullback. Opportunity is given at a premium price, they get in again, market flows down. You will see plenty of examples of this, and you'll be able to pinpoint them by yourself. And when you see consolidation happening very close to supply, you should be able to define and interpret what this consolidation is all about. Where you expect it to break to grab liquidity as supply, you should be able to know. So people that teach you sell at supply or sell at resistance, buy at demand or buy at support, they are not teaching you the right thing. All right. Without introducing the concept of liquidity graph, you cannot make it by just buying at supply, by selling at supply, buying at demand, all those things. Do you get me now? So this just to illustrate and to answer the question asked by one of us. I have brought out this to give you a clearer understanding. Now, do you understand it now?
Yes, thank you very much.
Correct. So as time goes on, you now be, as you are building on the knowledge, you can get to a stage where you would draw trend line again. I don't know if guys who are already following me here notice that for quite some time now, you really see me drawing trend line, all those things. They are not useful. They are just, you do it. It is only useful to you. But the major dealer in the market, they are not looking at your trend line. They are not looking at what you are drawing. I'm telling you. So you need to look at the market holistically. using all the types of analysis you have and finalize it with what's called behavioral analysis. You need to look at how the market behaves in different sessions. When we get to market session, you will see behavioral analysis in detail. Why is the market going fast around 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock Nigeria time? Why is it going slow around 6 o'clock? When London open, why is it flashing up, flashing down? You will see the details. These are what you should understand for us to succeed in the market. Any other question before we close? Any other question?
Yes, sir.
Thank you, sir.
Okay.
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 Hello, sir.
All right.
Hello, sir. You said we should answer the questions at the general.
The general group, yes.
General group. Which one is general group, sir?
Elliott wave theory.
Okay,
Elliott wave free group. Elliott wave free group.
Okay, sir. Okay, sir. Thank you.
Yes.
So much.
When you are putting those questions there, the essence of putting it there is that some people that even register for the course but they are not able to make it, they will see that you are already teaching them what you know about this market. It's not about chart. You see,
sir.
most people they fail because they think Forex is about technical analysis. What's technical analysis? There are many people who never open the chart for 1 year. You are surprised? They don't look at the chart and they are very profitable. They are looking at what is happening on the fundamental realm and they base their trading on that. And they are making it. So, but many of us will just sit on technical analysis and we dwell on it too much. And because of that, we are failing. So let them know that you know the foundation of this stuff. Let them know you know this stuff. You know what it is all about. You can explain it. What I'm doing for you is for you to be able to even create a course on forex trading in future, because you will have been able to assert your authority on the key concept and their interpretation. Okay? That's what I'm doing for you. Do you understand? So answer it on a general group. Even those that are trading, there are some of these things they don't know. Teach them there. That's the essence of me saying answer it on the general group, but don't make it too long so that they'll be able to read sharp. You must answer this question before we go tomorrow. If you don't answer it before next lesson tomorrow, you are failing to.
Okay, sir.
Yes, next class is 8 p.m. tomorrow. So you must finish this course. You must finish this assignment and submit. I want to see that group bombarded with answers. Don't write it too long. If not, they will not read your answer. Don't write too long. So the assignment, what is foreign exchange market? These 5 participants in foreign exchange market is the apex bank of any country participating in forex for profit and side. Then tomorrow, prepare your mind. Day 2, we are going to be doing understanding financial instruments available in the market, e.g., forex, bond, crypto. Number 2, how are these instruments related? Are they related? Number 3, which is the most liquid? Number 4, how do we take advantage of the liquidity to trade? Number 5, what are forex pairs? Number 6, classification of forex pairs to major, minor pairs, cross pair. Number 7, market trading session, Australia, New Zealand session, Asian session, London session, New York session. We want to describe the characteristic of each of these sessions. The one you should cancel in your brain. The one you should just be looking at, but don't trade it. The one you should trade, I will tell you how they behave. When you want to study behavioral analysis, you can't run away from market session. You tie your market session with behavioral analysis and price level, and you will thank me in future. Describe the characteristics of each session, noting the following. Well, those following is in my brain. I will tell you tomorrow. Which pair should be traded, when and why and how? I forgot to put how. Which pair should be traded, when, why, and how? So you don't know that there are different ways you trade different pairs. It will be traded when and why and how. And how. I will tell you. Those are the things we will do, and we'll do assignment. That's lesson for tomorrow. So that ends our lesson for today, being the one I just. Another question?
I have something to say, sir.
Okay, you have something to say? I can hear you. Please go on.
On the general group, I've been restricted from typing. So what do I do?
Okay, you have been restricted because when you join, there was a bot that required you to answer some question. Did you answer the questions?
No, I didn't even notice anything like that.
You need to answer the question for you not to be restricted. Okay, what you are going to do, okay, what you do is that after this lesson, what you do is chat me so that I will find a way out. Okay,
okay, sir.
Yeah. Another person?
Yes, I can. I think what she said as well is I have that kind of challenge. If I sent a message, it do give me a time my message will last before I can send another message on the group. I don't know why, sir. It started today. I noticed that today.
It's because when you join the group, all right, is that when you join the group, you did not answer the bot. Just join. Just click and join. So when you click and join, you need to answer those questions for the bot to recognize you as a human being. Because in the past, I normally had some people who were coming to the group, you know, and they were spamming the group. They were doing a lot of things, selling crypto, selling all these different. I don't want my people to be corrupted. So that's why I have to consult an expert to put in that measure in place. So when you come in, it will scan your profile. It will require you to answer some questions. So if you are able to answer it, it knows that you are a human being, you are not a robot. It will now pass you to come in. So you need to answer those questions. It's very important. So chat me too if you have that question. We will resolve it so that you can submit your assignment.
Okay, sir. You said my question is you said something about retail. You said something about participants in the forex market. You mentioned retail trader and edge. Is it hedge or edge fund traders also something?
Hedge is Hedge is HEDGE.
Okay.
It's hedge. They hedge it. They hedge their position when somebody is selling and buying. That's hedge fund. Yes. Another question? Okay. So I see you tomorrow by 8 p.m. Have a lovely night rest. Bye.
Right. Thank you very much.
Thank you so much. We appreciate it.
Yeah.
Have a wonderful night rest.
You too.